Good morning, everyone. Let me just make sure this microphone's working. Yeah, it all seems to be okay. So welcome to the live broadcast. It's been a bit of, I think it's been about a week and a half since we last did this. So as usual, what we do during this session is have a look at the major markets. So we'll take a look at stock market indices, commodities, a couple of FX markets. We'll have a look at Bitcoin, see what's been going on over the last week, and maybe what are the levels to look out for in the days ahead. I just don't appear to have had a push message come through. We normally send these out from the app to clients. I'm just going to send someone a message. There we go. Let's put the risk warning up before we get started. So we've seen a lot going on, I think, over the last week. We've seen quite a bit of weakness in stock markets, with some of the tech stocks getting hit pretty hard. So we'll have a look at those. Oil has come off an awful lot over the last couple of weeks, trading down to the low 50s. Oh, it's just come through now. There we go, perfect. So we'll take a look at that as well. And after a good run for the dollar, maybe we'll see a bit of strength coming back for the pound and the euro. But let's get started. Let's just bring this up. So what should we start with first of all? I think first of all, let's start with stock markets, because we have seen, I think, something of a turnaround in sentiment over the last couple of weeks. And I think the question is whether it's a major one. Let's start off with the S&P 500, because we did see quite a bit of strength coming back in yesterday. So here's the big picture over, what is this, since September last year, that big sell-off, the recovery coming into this year peaked so far, at least, at the end of April, beginning of May. And you can see the story. Let me just take the RSI off for now. We'll come back to that. The story for most of May was of declining markets. You know, we did see a pretty chunky turnaround yesterday for stocks. So I wonder if this makes for something of maybe a more bullish week after that strong surge yesterday. So we did see the market turn around. Clearly on the S&P, we'll have a look at the Dow in a minute. These old lows from March, 27.20, 27.25, you know, they were pretty important on the way up. It sold off for 5 days into that level, turned around, and then pushed out to the highs for the year. So far, I think that's maybe the big level to watch in the days ahead. But after this weakness, it does start to look like maybe because of the big move yesterday that we're seeing sentiment starting to switch around to positive. But let's just take a look on the hourlies. So there was the move yesterday. We had something of a quieter day on Monday of this week, a little bit sideways. It did gap lower in the Asian Open on Sunday night. So we did see a bearish start to the week for stock market indices, continuing the weakness that's really plagued these markets for a while. Quieter day Monday, and yesterday was really the surge. So I think what will be interesting for today is if we get perhaps a bit of weakness, a little bit of a correction following the slide yesterday. For me, it's all about where does this stop. So for today, for this afternoon, the stock markets, be looking to see if buyers come back in on any weakness this afternoon. So quite the strong turnaround yesterday, and maybe finally this is the start of trying to shake off that weakness that was in place for much of May. Let's pick up the Dow. I'm guessing we're going to see a similar sort of move on the Dow. Here we go. So the Dow Jones, beginning of May, pushed as high as 26,700. Earlier this week, it had traded down to what, 24.6. So that, you know, that's a big old slide we've seen during May, where the market's lost a couple of thousand points for the Dow. So about what, 6-7%. So the Dow drop during May. Again, yesterday, we had this turnaround. So I think it makes for possibly a more positive week, you know, because it's a really strong performance, a couple of days worth of gains. We do have the payrolls on Friday, so non-farm payrolls. We are doing the webinar from 1:15 on Friday, the monthly US unemployment figures. So I think there's a risk it will have a quiet day tomorrow, waiting on those, but a volatile finish to the week. But I think the turnaround we've seen over the last couple of days suggests that maybe this weakness is coming to an end. And for the last US market, let's have a quick look at the Nasdaq, because the Nasdaq has been, I think, pretty hard hit. You know, we've seen some of these tech stocks really take take a right battering. So the Nasdaq had been as high as about what 7,850. By the beginning of the week, it had dropped below 7,000. So the Nasdaq dropped what 10% during May. So a bigger sell-off than the broader indices. But again, a big turnaround yesterday. So I think the question is, for fans of candles, just about maybe bullish engulfing pattern yesterday. And I think the question for today is, after yesterday's strong surge, if these markets start to correct a bit, where do we see the buyers start to come in? Let's see what happens. And we'll have a quick look at European markets, and then we'll get in and have a look at some of the other markets out there. So the DAX, again, all these markets getting lifted by this strength yesterday. There was the DAX. So during May, it had gone from 12.5 as low as 11.6. So we saw a 900-point drop for the DAX during May. But again, starting off so far in June, pretty positive. So I think it's always difficult to trade these sort of moves personally, because when it has a day where it just pretty much goes vertical all day, me, I'm the sort of person who sits there waiting for a bit of a correction, and we didn't get it. So I think it's with those sort of moves, it's great if you're in them already, you just sit there and ride it up. But I think maybe what is more interesting is if we do see maybe these markets correct a bit, watching for them to push back into yesterday's range and for the buyers to step back in off the back of that. Let's see what happens. Okay, let's have a look at other markets. Gold has finally, and quite impressively, put a rocket under itself in the last week or so. So I've been watching this market since August last year. This recovery in gold from about 1160 an ounce has looked something like that. So it all looked fine. Let's just sort of scroll back in time. So here we are. This is back in mid-Feb this year. That all looked perfect. The recovery was going on. Any weakness looks like a buying opportunity, blah, blah, blah. And so we go on. But then since February, the market has just been sliding, just giving up gains all the time, and by April, it had slid back to the levels not seen since really the end of last year. And we were saying, looking at this gold chart over the last live sessions we were doing, because I've been long gold on the way up, buying into this trend. And they were saying, well, look, if gold is going to recover from anywhere, it needs to start getting a move on from down here, because it's come right back to this trend. And you had a bit more faffing about in May, where it looked like it was going, and then it gives it up. And then finally, over the last week, it has got a move on. And it's quite an impressive move. We are seeing it threatening maybe the highs for the year. Highs for the year just ahead of 1350 an ounce. So I think that's the next logical target, 1350. If it can break through here, the next big target, I think up at 1366, 1375, that sort of area. So finally, gold has come back to life from a bullish point of view. If you look at the RSI, would you want to buy it here if you weren't in already? If you look at the RSI, it is significantly overbought up here. This is the most overbought it has been since, we've got to go back to here, the beginning of 2018. Okay, on the 10-day RSI. So it's pretty extreme. It could definitely do with some cooling off after a run like this. But for now, any weakness on gold still looks to be a buying opportunity, hanging on to this recovery from the 1160 level in August. So, but, when you see a market that's gone up 5 days on the trot like this, it's definitely due some sort of cooling off. Saying all that, it's still going up today. Yeah, so for me, I would be watching those highs from earlier in the year up here around about 1345, 1350. Perhaps we'll see a bit of selling creeping in ahead of those. But the big picture view, still positive, and that recovery is still going. Let's take a look at oil. I've been surprised by the size of the sell-off in oil, and it's been a big one. I think the Mr. Trump and his trade wars and trade war chatter, I think, clearly taking its toll on some of these commodities, such as oil. So we had this recovery from the December lows into mid-April. Trades up to about $66.50 a barrel mid-April, and 6 weeks later it touched 53. So it's lost what, $13. It's lost 20% the price of oil in about 6 weeks. That is a big sell-off. We have seen it stabilize over the last couple of days or so. And I suppose there's a couple of ways of playing this. I think the aggressive trade, if we looked at the RSI is very oversold, most oversold it's been since November last year. But bear in mind, it still carried on sliding back then. But I suppose the aggressive trade, if you thought the sell-off was overdone, is you're a buyer now at 53.15 with a stop loss under the low from the 2nd of June. So under $52, basically. So you'd be banking on, is the market going to have another push back up? So that's one way of trading it. I think the other way is perhaps to sit on your hands, wait to see if it breaks 52. It was old support sort of back here, 51.5, this sort of area from late Jan, Feb. Wait to see if it breaks 52 and if it sparks off another round of selling. So I think it's been a pretty vicious sell-off over the last couple of weeks for oil. And for me now, I think it is all about these old lows, 51.5, and the most recent lows, 52-ish. Can it hold above here and mount some sort of recovery? But given, if you look at some of the size of the moves here, this day here, the market moved $4 in a day. So I think it illustrates what a volatile market oil can be, which appeals to traders, obviously, but it's important to have your risk management in place, because you don't want to be the wrong side of a 400-point move. But let's see what happens. I think I'll be watching those lows. I think it feels like it's overdue a bounce. It is pretty oversold. We are seeing this stability. But for me, in the short term, it's all about that $52 a barrel level. Let's take a look. Here we go. And you can see it there since the end of May, just about holding above 52, but fairly quiet day to day after some of the big moves we've seen. Let's take a look at FX markets. Then we'll have a look at Bitcoin as well. Then we'll wrap things up. But as usual, if you've got any questions, if you just fire them in to the chat on the right side of YouTube, the YouTube screen. Let's start off with pound against the dollar. I mean, it's been a pretty horrible couple of months for the pound. The market traded up to 134 in mid-March, and then in early May peaked around about just shy of 132, but it had traded down below 126 by the end of May. And I think we all know what's going on here with the pound. We had the Brexit exit that never happened in March. So that's created, I think, more uncertainty. We know what's going on in the UK at the moment. Theresa May, the Prime Minister, is stepping down. So we have various people jockeying for position to take over. So again, we have a fair bit of instability at the top of UK politics. I wonder if Mr. Trump's visit this week and some of the stuff he's been saying about a trade deal has been helping the pound a little bit, because we have seen something of a recovery. But just to take a step back and look at the bigger picture, where we'd traded to at the end of May, we were pretty much back down near the lows from the year, from like the 2nd and the 3rd of January. I must admit, I never thought we would see that sizable a sell-off from that 134 area. But here we are, back at the end of middle of December, beginning of Jan. 124 to 125 had been big support. So if it was going to turn around anywhere, then this was the place. It's traded as low as 125.60. So, I think perhaps we don't see the market just go bang all the way back up to 132 again. But I think it is an interesting one here to keep coming back to see if it can form some sort of a base down here in this 126 area. So it's rallied for the last 5 days, the pound. Let's take a look on the short-term chart. That recovery is still going. This recovery that started at the end of May, still chugging along. So arguably, if you're a shorter-term trader, still a buyer on weakness, but just a little bit wary of these big obstacles coming in, 127.50 and 128. Okay, so for now, it looks like it could squeeze a little bit higher for here, but it wouldn't be surprising, given what's going on with UK politics at the moment, to see a bit of chop around these levels, but to see if 126 does end up being something of an important base. Let's take a look at the euro. The euro had a bit of a move yesterday. Let's take a look at that. So, over the last couple of days, I should say. So the euro, has been I think it's been a bit of an odd market since November last year. We've been in this gradual drift for euro dollar. It breaks the new lows, which looks bearish, but then recovers and then breaks and then recovers. And over the last couple of months, it's held above 111 euro US dollar. So we get these rallies, we get these strong moves. So we've seen, what's that, 170 point move over the last 3 days, but they do run out of steam. So I think it's going to be interesting to see, well, where does this one end up? So I think the risk is, we could well see it poke above 113 euro dollar. Let's flip it over to the hourlies. Here we go. There's the move. So we could well see it, have a look at these sort of levels. But 113, 113.40 has been something of a problem. Yeah. So for now, okay, it's had a good bounce back, but it wouldn't be surprising to see a bit of selling to come in. Maybe there'll be something in the payrolls on Friday that turns people back onto the US dollar, and we see the euro under a bit of strength. But it's been a good bounce back this week. But it's far too early, I think, to start talking about a longer term recovery for the euro against the dollar, because we are still in this drift, and the more gradual drift that's been going on pretty much since the beginning of the year. And then finally, Bitcoin. I can see there's one question come in. We'll do that question in a sec. Let's have a quick look at Bitcoin. Here we go. So, I mean, again, clearly pretty volatile. It all started, this move on Bitcoin all started with this break in April when it surged through these old highs around about $4,500 a coin. And since then, the thing has actually doubled, touched 9,000 at the end of May. And it's trading now at 7.8, so again, as volatile as it ever is, dropped back, what, about 15% off those highs, 12% off those highs. But I think it's still positive. We've been saying all along on the way up here, this does look like a more sustainable recovery in Bitcoin compared to what are probably dead cat bounces that we've seen over the last year. So I personally still think we'll have another look at 9,000 on Bitcoin. And I suppose the aggressive trade here, if you're a buyer now at 7.8, we do have old support around about 7,450, which does tie up with where the market traded to in the early hours of this morning or late last night. So we do have, quite chunks of support moving up from 6,500 on Bitcoin up to about 7,500, let's call it. So I think as long as we're holding above this area, I think the bulls arguably still have the upper hand. So let's see what happens. But over the next couple of weeks, looking for Bitcoin to see if it can try and squeeze back up to 9,000. Okay, there's a couple of questions, so let's have a look at those. So we've got sterling yen, the old favorite. Have a quick look at that one. Sterling yen. Let's bring up. So I'm guessing a bit of a bounce back. Yeah, a little bit of a bounce back over the last few days. Nothing major. It's interesting because it looks quite similar to the dollar yen chart. So we have had some what's the word I'm looking for? Yen strength over the last week, but we've seen the pound come back a little bit. I think it's difficult to call when it's like this because, okay, the trend for May in sterling yen is still definitely down. Where we are now, we don't have any real support, because of those massive moves we saw at the beginning of January in sterling yen. The support is down here, which is 600 points away. It's miles away. So, but we are seeing it form a base over the last couple of days. So let's take a look at maybe the shorter term for sterling yen. Hold on a second. I think I've just managed to freeze the platform. Hang on a sec. There we go. Right, let's bring that back up. Sterling yen. So if you look on an hourly, you would, if you look at that, we've got that move from May in sterling yen. That is still down. That weakness in sterling yen. So I think we've got to be a little bit cautious of getting overexcited by a couple of days worth of gains. I think what would be interesting, if it manages to push up to 138.5, that sort of area, so about 70 points higher than where we are now. I'm not quite sure what's going on. There's a lot of planes going over. I'm wondering if it's the D-Day commemoration. So if we push back up to 138, 138.5, then that starts to look like maybe a selling opportunity, I think. So in the short term, maybe a bit of strength, but for now at least, it's difficult to argue with that trend that's been in place for sterling yen since the beginning of May. So I think the risk is, despite a couple of days of strength, looking for it to start to roll over again, sterling yen. Okay, but let's come back to it later in the week and see if it's managed to break out of the trend. And then finally, someone's asked for the dollar index. So DXY, this is always a really interesting market to watch because it's the US dollar against a basket of other different currencies. The main component in the basket is the euro, but it's also Swiss franc, pound, yen, Canadian dollar, blah, 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 all that sort of stuff. So I think this is interesting, the moves we've seen in the dollar index. And again, this trade war chat is not helping sentiment towards the dollar. So it was only back here in May we saw the US dollar index hit its best levels since May 2017. So we did see the US dollar index trade to a 2-year high. Since then, it's given up a chunk of gains. So the market's dropped back about 150 points since those highs. But I would still be tempted to think it's going to have another look at those highs. So for me, even though it's weak, I would not want to be a buyer yet. But I think we could argue, if we can pick up on the trend here, if we pick it up off these lows from back in wherever it was, 2018, and it looks maybe, my mouse has decided to die. It's really not my morning today. Hang on a second. There we go. Switch it off and start again. There we go. That recovery is still going there in the dollar index. So we're 18 months into that. That's still in place. So for now, at least, I think this weakness, for me, has to be treated as a buying opportunity. It's just how far and how deep that sell-off goes. The same way with gold. You know what we had with gold over the last couple of whatever it is, months. So for me, be looking for it to snap back. The big level are these lows from March and late Feb, 95, 70, that sort of area. So about 100 points below here. But I would be waiting to see if we can get some dollar strength coming back in. It's not happening yet. It's still weak. There's the hourly chart. You know, it's still weak, still sliding. Little bit of support coming in at 96.70. So that's one to watch, I think, over the next couple of days. But even though it's sold off since those, 2-year highs, or 1-year high, whatever it is, that trend is still intact. So I think this is a really interesting one, how this could potentially be setting up. Thanks for that, Simon. And then finally, Ethereum against Bitcoin. All right, let's have a look at that. I'm assuming we do cover that. I don't think it's ever one I've looked at before. There we go. Ethereum, Bitcoin exchange rate. I mean, it just looks a bit crazy, I think. We see strength. So when we're seeing this chart going up, that's Ethereum strength, isn't it, against Bitcoin? And then it just gets sold into. So again, beginning of May, a bit of a surge for Ethereum, going from, so it went from 24.50 to 34, and then just tails off again. So for me, it's a bit of a meaningless chart, to be honest. But I would think that the risk is that this sort of weird drift continues, that Bitcoin in the long run outperforms Ethereum. And that's what this chart, I think, is suggesting, where we get a surge, then it drifts, a bit of a surge, and it drifts. At the moment, a bit of a surge, and it drifts. I must admit, I don't think you can actually trade that with us. I don't think everyone I would trade personally. The spread's not that bad. It's, I suppose, for a crypto, it's about 24 points, something like that, 31.37, 31.61. So you can trade it if you want, but I think it's just a bit of an odd looking one, that one. But yeah, just I think the risk is that maybe we'll see a run back to those May lows. So let's have a look. QQQ, so the QQQ, which is of course the Nasdaq tracker fund. We haven't got it on here. It's going to be the same. It's pretty much the same as the Nasdaq 100, isn't it? Which we looked at. So for me, you know, the Qs, like the what they call for the S&P, the spiders, SPY, tracks the S&P. So the QQQs do the same for the Nasdaq. But for me, it's all about, you know, it had a bad month last month in May. We've seen a big turnaround the last couple of days. It's all about what happens the rest of the week. I think that could really set the tone for June, I think, for these stock market indices, if it can start to shake off this weakness. So I think we will have a better idea at the end of this week. We've got the payrolls on Friday. So I think once that's come out, once that has come out, we'll have a better idea of what's going on. Right, we'll start wrapping things up there. So we put a lot of content on the channel the last few days. We put a bit of a more in-depth oil video on over the weekend that's proved popular. I did a look at Tesla yesterday, so I think that could be an interesting one to have a look at on our YouTube channel. Really, you know, what's gone wrong at Tesla this year? The share price has halved since the December highs, pretty much. I think it was 380 in December, and it's touched 188 or so in recent days. So if you want to find out a bit more about Tesla, take a look at that. Here's the share price chart. Big bounce yesterday, 8% bounce yesterday for Tesla, but all it's done is taken it back to where it was the middle of last week. But that's the move. I think it's really interesting. So for me, any strength, any half decent strength in Tesla back up to the 240s looks like a short selling opportunity. But take a look at the video we did yesterday to find out a bit more about that. We will wrap things up there. So as usual, we'll do this all on Friday for the payrolls. To never miss out on this stuff, on the content we do on YouTube and the live stuff, just click on the subscribe button and the alarm bell thing down there, and you get a push off YouTube. But when we do stuff live, but if you, that's it. Thanks for coming along. If you got any questions, drop me an email or leave a message under this video if you're watching the recorded version. But my email address is davidjones@capital.com, and we'll do it all again on Friday for the payrolls from 1:15.